The Lagos Chamber of Commerce and Industry wants the federal government to address the mild but negative macroeconomic indices noticed in its second quarter economic review.
Well, during the presentation to journalists in Lagos, notable issues of the private sector were highlighted in the period under review.
The quarterly economic report of the Lagos Chamber of Commerce and Industry has become a consistent event to look forward to. Being the second of such this year, the President, Mr. Remi Bello, started by analyzing the inflation and interest rates.
Nigeria's inflation rate rose from 7.8% in March to 7.9% in April and 8% in May 2014. Nigeria's level of inflation also remains significantly higher than peers. Given the potential threat that the anticipated high election-related spending in the run-up to the 2015 general elections poses, we can only expect higher levels of inflation in the months to come. The foreign exchange market has been relatively stable, with slight appreciation of the naira witnessed only at the interbank and bureau de change (BDC) segments of the market. Notwithstanding, there are concerns that increased yields and interest rates in the U.S. could have negative impact on capital flow.
Commending the automotive policy of the federal government, the entrepreneurs also urged the government to resolve the fundamental supply concerns involved.
As a major stakeholder in the economy, the Chamber welcomes a policy thrust that seeks to promote self-reliance in the Nigerian economy because there is great value in domesticating spending. Without a good foundation, the superstructure cannot stand. The recent tariff review would have the following negative outcomes for the economy.
Beside other matters that were presented, the overlapping functions of some regulatory authorities in the area of export and import came to the fore. On these, the Chamber calls for a merger that will create an enabling environment for the private sector.